Hello, folks. Welcome. Good evening to you this Saturday. Welcome to Under Money Space with me, Kalu Aja. Of course, we're talking money, the economy, and of course, personal finance. This Saturday, we are doing a preview of the State of Enterprises report, focusing really on Nigeria, the financial, banking, insurance sector. We're going to talk around that. Lots of information in a great report that has been done. The folks that are going to take us through this report are already on the space. I have sent them an invite. Once they do, we'll add them on and then we can listen. I found the report very, very educative, and I believe I will share the link to that report once the space is done. It's really data packed, and I think if you really are a guy that just wants to understand how the economy of Nigeria is doing in terms of specifically the financial sector, it's a great report for you to have, just even for reference purposes. I think it's just wonderfully done. So we will share that space to the report, share the link, to that report, and then of course you can go in and look at it for yourself. Yesterday, I had done a few tidbits, and I hope you guys had seen that. It's on the Twitter space. I'll share it again. So just in case you want to catch up on the tidbits, i.e. the short version of what is in the report. But we do have our guests here. I'm going to invite them to introduce themselves. And then I can go ahead and ask them questions. And of course, if you guys have questions, please feel free to ask or even DM. DM will be open. But without further ado, let's go into Enterprise NG, who are the authors and owners of the report, who are going to take us through. Good evening, Enterprise. How are you doing? Welcome to the space.
Good evening, Kalu, and thanks for having us.
Thank you so much. You mind introducing yourself so we'll put a name to the voice, as it were?
Yes, definitely. My name is Lami Adekola. I am Director of Policy and Public Affairs at Enterprise Nigeria.
Gotcha. Lami, let's just jump right into it, right? What is this report about? Who did it and why?
Yeah, thanks again, Carlo. I think a good place to start would be to basically let the listeners know a little bit more about Enterprise Nigeria, what we do, why we exist, and why we have the report. So Enterprise Nigeria is a policy and advocacy group set up by operators within the financial and professional services space. And FPS, as we call it, is made up of the full spectrum of subsectors within that space, which is banking, insurance, capital markets, asset management, pensions, non-interest finance, fintech, professional services, and sustainable finance. So 9 subsectors. And basically, we believe if we are able to create an enabling environment for Nigeria's financial and professional services sector to thrive, we will by so doing be able to transform the economy. And it's because of the cross-cutting nature that financial and professional services has across all other main sectors of the economy that we think this is a lever for change. So the State of Enterprise report is a report we put out annually that takes a look at these different subsectors. It's the first of its kind. No other report prior to when we started publishing this about 3-4 years ago. No other report kind of like takes a broad look at every one of those subsectors. And we kind of like establish where we are, what we're doing right, what we are not doing too right, and that we can change. And we also kind of like come up with policy recommendations. So it's a compendium of what has happened in the sector in 1 year. So in this case, it's 2024 full year. But we've also touched on Q1 2025 as well to see what's happened in Q1 also. And basically, it's a tool for policy, but it's also useful for the general public in terms of having a clear understanding of where the sector is and how it affects them as well. So that's who we are, and that's what the report does. And I'm excited to be having this conversation with you, Kalu, and the rest of the folks on this space. And hopefully we'll dig deeper into the report as we go ahead.
Definitely, yeah. Thanks for that introduction. That explains a lot. It took me about 2 or 3 days to just read the report, try to get a sense of my arms around it, get all those little final points. I did see a quote by, I believe it's Obi Ibikwe. He described the Nigerian financial and professional sector, i.e. the banks, insurance, the 9 subsectors we talked about, as the engine of innovation, opportunity, and growth. You know, when I was growing up, I saw this ad, I think it was First Bank, where this guy came from the village and it was like, he went to this First Bank banking hall, there were just computers. Back then, computers were like, no one had computers, and the First Bank had computers, and he says, technology, you know? I remember that ad in my head, you know? So is the Nigerian financial sector still and is the engine of innovation, opportunity, and growth?
Yes, Kalu, I remember that ad you're talking about, and really interesting. I think we need to appreciate the importance of the financial sector, not just to Nigeria as a country, but to every other country in the world. And I'll give an example. So if you look at the most developed countries in the world, if you look at the US, the UK, Japan, all of these countries have phenomenally strong financial and professional services sectors. So these countries that are well developed are also countries that have extremely strong FPS. You now ask the question, is it because they are developed that they have strong FPS sectors, or is it because they have strong FPS sectors they are developed? But the reality is it's actually both. For you to achieve development and sustainable growth, you need to have a financial sector firing on all cylinders. And yes, our sector is still that engine for growth, it's still that engine for innovation, it's still that engine that creates several multiplier effects across all other subsectors of any economy. So be it agriculture, oil and gas, technology, whatever sector it might be, there has to be interactions with the financial and professional services sector for them to function effectively. So not only are we the engine, as they always say, cash is the lifeblood of any organization, and it just happens that most often than not, that cash is controlled in the financial and professional services space. And in addition to that, so the professional services element of it is the one that helps with business planning, corporate governance. We have lawyers as members as well. They are the ones that help to ensure the economy is functioning effectively. So, yes, we are still that engine that powers the economy.
Yeah, I mean, I saw this quote here. For every 100 naira generated by Nigerian tax authorities, the sector, i.e. this sector, contributes 6 naira, up from 5 naira. That's a big contribution. Every 100 naira you guys are doing 6 naira. That's really big. I mean, for just really, and the sector is very, very, it's very public. It's very, very out there, but it's really, really small when compared to the size of the GDP. So to generate 6 naira for every 100 generated, that's actually a good thing, right?
Yes, it is. And our sector contributes significantly to the economy. As you've rightly mentioned, 6 naira out of every 100 naira generated in the economy as a whole. But more than that, if you now start looking at things like revenue to government in terms of capital, or in terms of company income tax, we punch way above our weight in that we generate 25% of the company income tax generated in the country as a whole. So sector is critical. It's important, not just for the cross-cutting elements that we have in terms of nation building and creating a strong economy. It's also important as a key revenue source to government. And it's not just Nigeria, it's for most developed countries as well. The sector always plays that key role.
Understood. So let's do it this way, right? You talked about the 9 subsectors. Like I said, I had gone through it. Is it okay we just go through one by one those sectors? I did a few questions here or found a few questions I'd like to talk to you around. Let's start from banking, which is the one everyone knows about in Nigeria. Banking, let me just quote, collectively, the financial institutions under banking, right, account for 5.8% of Nigeria's GDP. Again, that's major, 5.8%, climbing 30% year on year to about 4.58 trillion. That's their, should we say, their capitalization size in the GDP, 4.5 trillion. The banks and insurance companies, who are the primary contributors to corporate income tax, about 570 billion. They contribute to taxes in Nigeria, and nearly 830 billion in full year. They are the 5th largest contributors to VAT at about 223 billion. So why I'm quoting these figures of contribution is that when you come back to Nigeria, there's a lot of conversation in Nigeria about how the banks are making trillions and the real economy is sort of struggling. But the banks are making those trillions and are contributing to the income that Nigeria is generating to then pay salaries to the everyday quote unquote Nigerian citizens. Why is there that disconnect? And do you think by revenues and employment alone, the banks are making up for that disconnect?
Thanks, Carlo. And I think that is a very important question. And the role the banks are playing in our economy is pretty significant. As you rightly mentioned, the figures that you've kind of like reeled out are true. Our banks are doing well. Over the last 10 years, the banking sector has outperformed the economy every single year in the last 10 years. And more than just their performance, we know how important the role of banks are to, for example, creating jobs, the number of high-profile jobs that we have in the banking sector. Also government revenue through tax, as we've talked about, is important. But that said, the disconnect you mentioned is also a matter, and we've touched on it in our report as part of policy recommendations that we need to focus on. It's a matter that we urgently need to address. So our banks are profitable. Our banks are playing a critical role in financial intermediation. But we need to get to a place where inclusion in terms of getting more people into the net and being able to get access to the capital formation elements of the bank's role is key. So we need to make sure funds are not just funneled into big business alone, but we are able to get SMEs and consumer loans to the general public. And some of the issues regarding why banks are not lending as well as they should be to the real sector are clear in our reports. So things like positioning SMEs in terms of their reporting structure and record keeping and things to be able to access capital from banks are some of the issues why banks are not giving money.
Gotcha.
Some of the additional issues are the credit rating system, ensuring we have a more effective credit rating system that is bulletproof, as it were, where people don't take money from banks and do not pay back. So most often than not, banks limit their risk to the bigger businesses because it's easier to control.
Gotcha.
But it's not serving the economy well enough if we don't spread the net. So it's part of what we're working towards. improving, and we're optimistic that in the coming years we would be able to find a solution to that issue.
Understood.
Thank you, Carlo.
Yeah, well said. Understood. Again, guys, I've shared the report itself on the Twitter feed, and most of the questions I'm going to ask, i.e., my highlights, I'm also going to share them when I ask a question, so you can sort of follow. But the report itself, it's shared on the Twitter feed. It should be on just the most recent one. So just go in, download that report. Like I said, it's a very, very well researched, lots of data in it. It's going to be a great reference material for you to just have, save, download on your computer or otherwise. So let's now go to insurance, right? And my quote here is the NGX Insurance Index, which tracks listed insurance companies, displayed an impressive 123% growth, i.e. last year, reinforcing the sector's potential as a catalyst for broader economic growth. So in fact, if you bought the insurance index in Nigeria last year, if you put a Naira, you would have made 123%. You would have beat inflation many times over if you just bought the insurance index. And of course, this was driven by the anticipated passage of that insurance industry reform bill. Now the bill has been passed. We've seen a lot of mandates on insurance for the construction, for life, for property and all that. In your view, do you think this is now going to create headroom for growth in this sector? So if there are potential folks listening that are investors, is this something that they should look at insurance as this thing? We have to get into this sector now. It's no longer this penny stock. This is now a growing success in the Nigerian economy. What's your view on this, please?
Okay. I think the insurance industry is critical for pretty much any country because of the resilience it builds in the economy and resilience to businesses, resilience to individuals. So in cases where the unexpected happens, insurance is always there to help you bounce back. And you're 100% correct. You've been seeing interesting upward movement in the NGX Insurance Index, not just in 2024, but also coming into 2025 year to date. And you're also correct. That is linked to the anticipation of the insurance industry reform bill, which importantly has been signed. And it does quite a few things that we believe would have a positive impact on the insurance industry that up to now in Nigeria hasn't been performing as well as the banking industry. In fact, there's saying in the industry that insurance is the evil stepbrother of banking that refused to grow.
Oh.
But with the new policy, I mean, they've increased the minimum capital base, which is important because, you cannot write significant risk, if your balance sheet is not strong enough. And so prior to now, most of our insurance companies are writing very, very small risks. They cannot even take the risk of an FPSO, for example, in the oil and gas industry. So the entire insurance industry put together cannot underwrite one FPSO because of a lack of balance sheet.
Wow. And
now that we have this new capital base, we think things would improve. Then more than that, you also now go to issues around investor confidence and also our beliefs as a people. Customer confidence rather, not investor confidence, but customer confidence. So to start with, we have this belief around insurance that God is always our insurance and such. If someone is coming to market you that take a life insurance policy, you'll be like, God forbid, I believe I'm not that kind of thing. But we need a reorientation of our people to get them to at least start taking on the compulsory insurance elements, then constant reorientation to also encourage them to take some of the non-compulsory ones. But when I talk about customer confidence element, another issue is claims payment. And this is something that the insurance industry is working towards. There's been an increase in claims payment over the last 3-4 years. We've been seeing improved claims payment, but it has to be better, because I wouldn't want to insure my car and it takes 6 months for me to claim on that insurance if there's any issue. So that effectiveness and stuff like that is are things that we need to take care of. But at this place, I also must mention that Enterprise NGR is working with the Nigeria Insurance Association, at the Association of the Insurance Brokers as well. And we're working with a few operators and also one of our members, PwC, to take a critical look at the insurance industry, take a look at the new law that's been passed, and come together and produce a report. And what we do with our report, as I said earlier on, is not just a documentation of information. It is a tool that we use to engage policymakers and all other key stakeholders to basically creating concrete action steps that would solve problems. So insurance penetration today is 0.44%. That's
runway for growth. That's what I hear you say. There's runway for growth at 0.44.
That is the headroom there. That is the headroom there. For perspective, banking penetration is 73%.
Wow.
You can see how far ahead banking is compared to insurance. So if we have insurance moving from 0.44% to 1%, you can imagine the impact it will have on the economy as a whole. But more importantly, those that invest in these insurance stocks, you can imagine the upside potential for them as well.
Interesting. Good insight there. Thanks so much for that number. Let's now that gives us a good way to dovetail into the capital market itself, i.e. the stock market specifically. The NGX All Share Index climbed 37.65%, right? And last year, massive. So that means it beat inflation. But what I did find important was it went up, inflows went up 126% on a year-on-year basis. Where is this inflow coming from? Both from the foreign investors and both from the domestic investors. So in essence, the foreigners or foreign capital flowing to Nigeria to mostly do bank recapitalization, that was one key driver. But also the domestic investors also participated. They rose about 49%. So the question is this: a lot of Nigerian firms and households are still not participating in the Nigerian stock market. We see the foreigners coming. Those foreigners could be Nigerians that are sophisticated, that live offshore, that recognize the opportunity and invest in Nigeria. We see the domestic folks in Nigeria that also are sophisticated, that also invest in the Nigerian stock market. But there's a lot of Nigerian firms that are quoted, that are big, making a lot of revenues that are not quoted. Also a lot of Nigerians that are working, employed, travel abroad, do summer in Greece, but still don't have a stock market, account. How do you think the best way to drive participation? Let's sort of focus on the SMEs now. How can we get more Nigerian SMEs that are multi-billion turnover SMEs to consider listing in the Nigerian stock market to grow not just volumes, but also the participation in that sector? What's your take on that?
Yeah. So, Kalu, the trajectory in the capital markets for 2024, that upside trajectory, the bull market, is currently still ongoing. Year to date, we have 35% growth in the market.
That's this year, right?
Basically, if you
2025
put ₦1 million naira into the market in January, you would have made ₦1 million and 350,000 naira on top of that.
This year.
This year, if you put money in January. And you're right, it's being pushed by the banking sector recapitalization, but more than that, the insurance reforms. And we're also seeing some other sectors like the pharmaceutical also doing very well. Exciting times in our capital markets, but when we now look at where the investors are coming from, it's mostly institutionals and foreign portfolio investors. So not just even Nigerian individuals that live abroad. It's actually huge portfolio investments as well. And we now have to start asking ourselves, what are the barriers to improved participation, even though we are still seeing slight uptick in local participation, but how can we get to El Dorado in terms of getting more people participating in investing, but also getting SMEs to list? I think some of the barriers for investors locally are financial literacy. So when we talk about financial inclusion, there's also the literacy element. Are people aware of these options investing in the market, and do they know how to go about it? Of recent, we've had issues around Ponzi schemes where a lot of people are swindled and they put their money into very funny kind of organizations. The thing is, those organizations, as funny as they are, they do a lot of awareness and literacy to encourage people to invest in them and promise ridiculous amounts. I think more legitimate organizations and the stock market need to focus more on literacy element and letting people know that, look, don't go and put your money in something that sounds too good to be true. Come into a market that is doing reasonably well and make benefits. And tied to literacy is also the complexity. So we and a number of organizations are beginning to make the process of investing easier. You can do it on your phones. You could buy shares. You could buy both primary and secondary market issuances of apps that are easy to get on your phones now. So that's another thing. If we're now getting into the part of the SMEs coming on board, what is holding them? One of the issues, and we've discussed this with some of our members that are in the capital market space, and mind you, the NGX is a member of Enterprise NGO too, is how can we reduce the various procedures necessary for listing? So while we're encouraging companies, SMEs to list on the main board, how do we also encourage smaller SMEs that are not as big as the ones making billions to list on the alternative market?
Sure.
We have an alternative market that the listing requirements are simpler. The cost of listing is also simpler. So it's enough awareness and education that needs to go in. And I also think SMEs need to be incentivized. So looking at things like, aside from reduced listing fees, are there incentives like tax incentives that would come with listing on the exchange? And disclosure is also typically a problem for companies wanting to list. Now, look, the disclosure requirements are too onerous sometimes. And in some cases, you now have to engage professionals to even help you meet some of these disclosure requirements. So there are possibilities for the exchange to develop shared services that help organizations meet some of these requirements.
Yeah.
But as I said, the important thing is we've identified some of these issues, and we're working with the key stakeholders to explore how these processes can be simplified and how we can encourage more listings, but more importantly, also encourage more investors getting into the market finally, I'll end with saying, while our market has performed extremely well on the upside in a bull market, we need to improve the depth of our markets. So,
Sure.
if you're trading on the London Stock Exchange, for example, or the New York Stock Exchange, investors make money in a bear market, but Kalu, as you will be aware, they also make money in a bull market, but also make money in a bear market when the market is down.
True.
When you short the market and all. But in Nigeria, we don't have that depth.
The derivatives, as they call them.
Exactly. So we are working with NGX and other key stakeholders to see how we can dive into this and deepen the market as well.
All right, fantastic. So we've been talking. We're about 30 minutes in. We're just at the third item. Let's get a few folks that want to speak, and then we'll come back to you. I got Fatima Sanis. Fatima, how you doing? Did you have a question for our speaker as regards the topic in question? Oh, Fatima just dropped off. Let's go on to asset management. Again, we're still in that whole stock, the banking, the stock market, capital market. Let's now touch on asset management in Nigeria, right? Again, my own quote from the report, which I've just shared, guys. You can go get that report on the Twitter feed. Asset under management of Nigeria's 10 registered private equity funds. This is private equity funds. Rose 78% to 121 billion, fourfold increase. Why I picked private equity was this is really a space in asset management that is really not that well known. What they do is not very public by nature of their private investment, but it's grown fourfold since 2022, tenfold since 2022. I mean, so is this driven really by, should we say, are we becoming more sophisticated? Are we able to raise this sort of risky, patient capital in Nigeria? Is it because of higher rates that are being offered, like in the market, or is it the right product mix? What is growing this usually elite market for private capital? Why is it growing fourfold? What's your take?
So it's a combination of both, where we see both local portfolio type investors and international LPs keen on getting into the Nigerian market. And basically, what they see is an environment that seems difficult, but an environment with significantly high return potential if you get it right. So there is that element of, yes, yield-hungry investors are seeing the opportunity in the market, but there's also the element of product fit. So managers are now beginning to package funds around infrastructure, fintech, consumer, and even some climate themes as well. And as they package this, they are also getting better in the structuring environment, and the policy environment is also improved. So I think it was 4 years ago that SEC came up with clear directives for private equity fund registration. And those clear directives also allowing the pension managers to also invest in private equity based on specific rules and guidelines. So that has also increased the size of private equity funds being raised in the local market as well. So we're seeing bigger interest, we're seeing better structure, and we're also seeing opportunities for co-investments with external DFIs and also bigger private equity firms. So for me, it's a significant positive, because once you get your private equity play right, you can funnel the right kind of longer tenured capital into projects, into infrastructure, into businesses. And the challenge with banks, so most banks, in Nigeria give short tenor funding. Or you see private equity players happy to stay in for 7-8 years and support the business and help grow it. So I think it's a positive. So it's dual, as I said. Thank you.
Gotcha. Let's go to Michael, if you mind. Michael, you had a question for us before we go into the next topic, which is going to be pensions. Michael, go ahead.
Yeah, my question is around the Nigerian stock market. Good evening, everyone.
How are you doing today?
Thank you, Carl.
Where are you calling in from today? From Nigeria, Lagos? Where?
I'm from Warri, Nigeria.
Okay, go ahead, sir.
Yeah. So my question is around the Nigerian stock market. Generally, although I've been seeing the gains in the Nigerian stock market since last year up until now, but I don't know, I've been skeptical because of, the regulatory environment of Nigeria, how it's highly political. So it has really, affected my perception of the market. Although I'm seeing those gains, but I'm someone who wants to go into investing or as a professional career, and I don't want to treat investing just I just want to be seeing the gains and I'm already investing in it. I want to consider, okay, what's the long-term structure of this? So if I'm to put my funds in here, can I say in the next 5-6 years I'm still going to be holding this stock? So I don't know. For me, the Nigerian stock market hasn't really, I've not really trusted it in that regard. So I don't know if you can clear my doubts around that area, especially regulation.
You want us to clear your doubts on investing. Well, no one's going to do that, right? So you have to invest according to your objectives, your risk profile, what you want to achieve in the market. Same way in the US market, same thing in the Nigerian market, it's all risky. You are putting in capital and you want to get a return. But if you have the tidbits we're dropping here and there, how the market last year was 35%, you heard him talk about insurance, where he compared the 70% for banking and less than 5% in insurance. No one's going to tell you go invest here or there. But when you look at an economy like that is growing like Nigeria, and you now have a law that says if you want to build a house, you have to get insurance for that house, which is the same anywhere in the world. And that real estate is now the largest contributor to GDP in Nigeria. If you connect those dots, you get an answer. You hear what I'm saying? Investing is research, right? And you've got to sort of go to where the money is and try to put money there to get something out. It's difficult for someone to convince you to invest. All we can do is give you information, try to show you the forest. Then perhaps you can go find a tree in that forest. I'm not sure if Enterprise wants to add anything on. Do you want to add anything?
Kalu, I think you are totally spot on. And if I will give you free advice, I will say the taste of the pudding is in the eating. Huh? So figure out, and you sound like an investor that like someone that hasn't really tested the market or gotten into the market yet. So figure out what amount you're comfortable playing with in the market investing. Go in, do your research, both fundamental, technical analysis, as Kalu said, is a lot of research. Do your technical analysis and also some sentimental as well. And put in some money into it and see how it goes for you. But we need to encourage as many Nigerians as possible to get into that play. You are leaving money on the table if you are not exploring the capital markets.
Yeah, thank you very much.
Michael.
I currently invest in the American stock market. I have some American stocks in my portfolio, so it's just the Nigerian stocks that I'm still skeptical about. But thank you so much for the.
Warren Buffett says. Let me just say something like that. Warren Buffett says, when people are fearful, you invest. When people are joyous, you divest. The point is, when things are bad, that's when there's a discount. When things are good, it's a premium. So if you wait to buy Dangote oil today, you are buying at, I'm not telling you to buy or sell. I'm just saying, look at it that way. When land is cheap, when they are fighting, you know. So you buy in there. If you wait for when there's an estate and it's gated and there's CFO, you're going to buy with those. So, but you have to do your research and your risk. I only get it. Did you mind us taking? Let's get thoughtful. Then we'll go to pension. Just because he's here. Just that, Michael. Thanks so much. Thorough thought process. Let me get you real quick before I go back to talk about pensions with my guests. Please go ahead.
Yes, absolutely. I just have a quick question. What's the? I think you touched on a little bit on real estate in Nigeria. I'm interested to invest a little bit in real estate, but what's the long-term planning strategy in regards to infrastructure and having proper, scaling abilities to when you do invest in the real estate? Am I going to be reassured that the infrastructure is going to be there to accommodate the scaling? And it's such exactly, for example, like you can see a country like India. They have a lot of people, and you can see it's not a place anyone wants to invest in except the local population. So is Nigeria actually taking steps to distance themselves from people from that type of region where they have a large population and then they have, those issues? And then even China, you can see China, they had those issues as well. And then they quickly, pivoted. And now people are investing in China, people are investing in Japan and other countries. So is Nigeria taking the steps? And I think it's something to do with the government, right? The government has a responsibility. But at the same time, if you're expecting people to invest into Nigeria, then I guess the private sector needs to take the lead in lobbying the government to make sure investors can actually, really invest in the country.
I mean, your question can be boiled down to: should I put money in a high risk economy like Nigeria? Let me see if I can answer it this way. The largest investment in the history of Nigeria, about 15 billion, was done by a Nigerian. That Nigerian, if the trajectory continues, will be among the top 10 richest people in the whole world in the next decade. From his investments in Nigeria, everything he has done to become the top richest African in the whole world, and one of the top maybe 10 guys in the whole world, is from Nigeria. So that same guy, when I was growing up, he was importing rice. When you are an importer, you don't have any stake. You bring stuff in, you take stuff out. He became a billionaire in dollar terms by investing in real assets in Nigeria. When you invest in Nigeria, it's a huge risk, but the rewards are even quote unquote huger, if we could use that word, right? So if you just look at that guy, then you drill down the line, there are so many folks that have also made a lot of money investing in Nigeria. Folks have lost money. I know a guy that brought in a lot of money to Nigeria and it's all gone. But that's what investing is, profit and loss, right? So the point I make is this: when you are looking to invest, if you want to buy a footballer, well, EPL has started. If you go buy Messi, sure, you're getting a Messi, but at what price? Can you afford a Messi? But if you go buy a Cole Palmer, Chelsea bought Cole Palmer 2 years ago. Now he's a star. If they sell him today, they're going to make millions of him. So you've got to look for the Messis when they are 12 years old, when they are 10 years old. Not when they're in PSG.
I have a question. Is for an investor, is there not an ethical code that they follow where
the point
in a country?
The point I make is,
but if you're investing in a country like that, but you want to extend the quality of life to the actual people that's there,
I get your question.
Them compete. So no, I know, but I just want
we got to move on.
Let me land my point. But I want to just make sure, like, when you invest in something, you want to make sure you extend the quality of life. That's how you do community events, fundraisers, and stuff like that. But also help the community build. But then also, as a person who's able to invest a large quantity of money, you should have a responsibility, ethical code to say, hey, you know what? I'm making a lot of money, but it's not benefiting a lot of people. And the people there are going to be stuck in the same cycle. And I'm probably going to be the last guy in the next 15, 20 years that's going to be investing the same amount of money. Unless I build the community and the people there, and then there's going to be 10 of me in the next 20 years. And they're going to keep building. But if I'm selfish and just invest and just take advantage of what's happening, then I'm just a person who doesn't care. Who just cares about money. So, I think it's different perspectives.
Your question
is that's how society changes over time.
I get your question.
Leaders like that who actually instill that type of philosophy. So I hope when you're speaking to your students and the people who buy your subscriptions, you have that type of methodology and that thinking, because you're driving people.
Okay, so let's. I'm so sorry. I just had to.
Carlo, I'll just respond to that very quickly. And ethical investments, I think, is touching around ethical investments and ensuring the social impact
Very
of
important.
investments actually reach as many people as possible. And it's one of the things we advocate for as well, to ensure we're not just growing and it's not equitable.
Understood.
So I'm mindful of all the other things we have to touch on.
Yeah, exactly.
So I'll end it at that.
Yes, correct. Let's go into pensions. I love the pension industry in Nigeria because, in my view, it's the most successful PPP initiative in the history of Nigeria, bar none. The pension industry's assets under management have expanded 26% to 22.51 trillion. This is 8% of Nigeria's GDP. 8%. In 2022, I believe, when President Obasanjo was trying to do the Pension Reform Act, I believe the pensions was negative 25% of GDP, i.e. what Nigeria owed pensioners. If you calculated it then, it was a negative 25% of Nigeria's GDP in 2002. Now we're talking about accumulation of assets under management, 22 trillion, representing 8% of the GDP of Nigeria. I mean, talk to me about this group. Why has the pension fund sector really been this huge success story? And what are the key things that they did there that we can then use to do other PPPs in Nigeria? What's your take?
Yeah, I think the pension industry, I typically smile anytime I'm talking about the pension industry, because it's one of those cases where Nigeria got it right, significantly got it right. Similar to like the telecom sector liberalization. I think those are the two poster children of reform in Nigeria. And from 2004, where when the contributory pension scheme was introduced, it's phenomenal what has happened in that industry. The share pool of assets under management, about 23 trillion that has been generated, is breathtaking, and the impact the pensions industry has not just been securing the future of our retirees, but it's also aiding transformation in the economy itself because of the funds that it channels into things like infrastructure, into things like private equity that I mentioned, that further channels into other sectors of the economy. And it's amazing how all of this has been brought about by well thought out, well researched, with strong evidence base. So they studied the pension industry in Brazil and a few other countries.
Chile.
And, pardon me?
Chile. They did
and Chile as well.
Yeah.
And basically localized some of the reform elements to work for Nigeria. So it wasn't just taking it hook, line, and sinker.
Yeah.
It was localizing it for our own case. That said, your question is around how can we leverage this kind of groundbreaking reform in insurance, pensions. How can we leverage this for other sectors like insurance and some of the other sectors that are not performing as well? I think one is following a similar model of providing strong evidence base.
Yeah.
And as I mentioned earlier, that's why we as Enterprise Nigeria, even though we're a private sector entity, we collaborate very strongly with the public sector, and we sit down and do the hard work or providing strong evidence base towards execution of reforms that will lead to transformation of Nigeria. And I'll give an example of a project we are working on at the moment, which is the Lagos International Financial Center. So we figure that we need to get the right rules and regulations, the right incentives that would attract a critical mass of foreign and domestic investors into Nigeria. Well, the government is doing a lot of reform efforts around different areas. You would imagine that a country with about 230 million people, it will take a while for you to get all of the reforms right, especially with the number of reforms that we need to work on. And also the impacts, some of the unintended impact of reforms, it will take a while and might not be too sensitive if you embark on all reforms at once. But what you can do is, after research and exploring, we found out that there are places like the Dubai International Financial Center, there is Qatar International Financial Center, and a number of other strong financial centers globally. We've done that research, we've done the evidence base, we've written to government, Lagos State government. We're doing this in partnership with Lagos State government, for example. And federal government is endorsing it. And we're working together to create that safe environment where the rules are right, where the regulations don't change, where processes are similar to international processes and stuff like that. So I said that to say, when the public sector and private sector are working hands in hand, it creates an environment where reform can be sustained irrespective of the regime in power. Because the public sector, while it changes every 4 years or 8 years, as the case may be, the private sector usually has continuity. And that kind of element, so the insurance, the pension industry success story is tied towards the strong private sector involvement in it and providing that long-term continuity with a government that is willing, that has the political will to push through on the reform element. So I think that's the secret. A government with political will, but a strong private sector willing to back it up.
Gotcha. And do you mind me just asking a very, very short question? How else also can we sort of channel more of the PFA's funds into infrastructure? I hear you talk about the financial center. Is there something else we can do just to push more of the monies from PFAs to build infrastructure in Nigeria?
So I think policy-wise, at the moment, PFAs are allowed to invest in infrastructure funds and bonds, but some of the others, and we need to get this right. The financial advisors and project owners need to get it right. Project structuring and bankability sometimes is always a problem. So you see projects not well structured enough to be able to attract pension fund investments, or even not being able to meet the requirements. They have stiff requirements before pension funds can put in money in infrastructure. So getting the structures right, ring-fencing projects, making them investment grade, possibly also bringing in credit enhancement structures from DFIs and the rest, and exploring blended finance options that keep the risk elements low enough for pension fund investments. Because you can imagine you're managing funds for the future, people's retirements. There has to be that element of ensuring safety while you are also pushing for reasonable returns across the different, so there are different bands of pension assets, and safety is key as well.
I agree, completely agree, yeah. Okay, perfect. So guys, if you're just joining in, we've been talking around the report titled the State of Enterprises SoE 2025 report. We're delving into Nigeria's financial and personal services sector. We're covering about 9 subsectors, right? And we're going through just one by one, just highlighting certain points there, giving us an opportunity to talk around it. All right. So once we're done, we're going to allow folks basically just ask their questions so that way we can have a much robust discussion. Let's talk around fintech. Fintech, right? Fintech is one area that has come from, boys with laptops to now unicorns. We now have unicorns in Nigeria, 2 or 3 or so. The quote here is Nigeria has led the continent in value raised, attracting about $331 million, not small money, nearly 30% of Africa's total capital that flowed into Africa went to Nigeria. We're seeing buy now, pay later services that is targeted to reach about $2.61 billion in dollars by 2030. Also, digital lenders as well. So the question is, can fintech fix this low level of formal banking in Nigeria? Banks have tried, but still there's this gap between Nigerians that lend from the formal banking sector. Can fintech step in and sort of bridge that gap between the formal banks and the informal lending, like the Ajors and all that? Yeah.
Yes, fintech is another sector that has it kind of like shows the Nigerian spirit. It's a sector that has performed significantly well, and so you talked about the unicorns we have. There are 10 unicorns on the continent.
10. Oh.
5 of those unicorns are Nigerian unicorns. And it shows you the innovation that exists within Nigerian entrepreneurs, and it shows you the drive that we have. And a lot of these players are in e-payments. A lot of them are now getting into digital lending as well. And you're right, they're doing reasonable numbers in terms of improving financial inclusion and getting people into the finance net. They are a replacement for regular banks. No, I think they're very complementary to the regular banks. They're not a substitute to them, but we are seeing, because of the digitalization that a lot of fintechs bring, and mind you, the banks are also rapidly digitalizing as well and trying to support that market better. But I touched on it earlier on. So the biggest problem with consumer lending is tied to things around credit rating. So if you go to the US or the UK, your credit score is everything. It's almost as important as your life. But in Nigeria, even though we have credit rating agencies, we've not yet gotten to that place where your credit score is key to every other thing you do. You cannot rent a home if you don't have a good credit score. You cannot buy a car. You can't do anything. So while our fintechs are improving the structures that and the algorithms to make sure that they are lending to people that will pay back and trying to reduce non-performing loans and stuff, I think the solution to both banks, regular banks, and fintechs is how we can improve. When you give your money out, you want it to come back. So how can we improve the credit rating structure locally? But more than that, we also now need to if we do get that right, we also now start having to look at the cost. The cost of borrowing in Nigeria. How do we drive some of this down? So cost of borrowing is linked to several factors, one of which is the risk element. If you reduce the risk of your money coming back, the cost should become cheaper to the end user and stuff. So phenomenal outlook for consumer lending, because we are not yet there. The upside for consumer lending and the potential impact credit to the real sector will have on our economy is transformative, to say the least. And I'll give you a quick example. So, and I'll use something one of our guests talked about, which is real estate. So if you take a sense of the average Nigerian, that is 30 to 40, they probably have not bought their first home today. And largely is because in Nigeria, a lot of things are cashed down. So people want to buy a house, you have to actually pay money, cash, to take that home. But in the UK, in South Africa, in more developed economies with 10%, buying your first home, you don't have to have paid down on that first home before you buy a second one and a third one for investment and stuff. And it's because they have credit sectors that work. And what does that do to the economy? So if folks 30 to 40 to 50, Nigerians have 10% to pay down today, but they're unable to demand a house. Do you know how many contractors, how many real estate developers are not selling at optimal? The aggregate demand within the country as a whole for homes is grossly suppressed because there's no credit to the real sector. And if we can open that, imagine the transformation you will unleash on the economy. Imagine the jobs you will create in the construction industry alone, and the multiplier effects this would have. So that's just one example of how important it is to solve the conundrum around credit to the real sector and consumer finance.
Completely agree there. Let's now delve into what we call non-interest finance, the, should we say, the ethical banking, as it were. So this quote really blew me over, right? Driven by growing demand for ethical finance, Nigeria's non-interest finance industry expanded to over 4.4 trillion in 2024. That's a large number, a number that I'm sure many people will be surprised to see. And it covers banking, insurance, even the bonds. When you drive on the roads today, you see Sukuk is building this road. That's a non-interest finance bond. So, I associate Sukuks now with infrastructure finance. What's your take on this? I see a huge opportunity here. Just like the center of Islamic finance is in the UK, Malaysia is now trying to take over. Has Nigeria seen an opportunity here where we can become the center of this non-interest financing, right? And then just grow this thing. Again, guys, Abia State is borrowing money from the OIC, the Islamic Bank. So this is not a religious thing, but it's basically a sector in that finance space that Nigeria has seems to have gotten right because we are early movers. Can we expand this space? And is there something that can add to growth and jobs in Nigeria? What do you think?
Definitely. It's a space that we should continue to expand. Non-interest finance, the beautiful thing about non-interest finance is the way most of the products are structured, because it's not interest-based. The success of the projects, the businesses they invest in is key to them. So they are not just tied to, it's securitized and whether the business succeeds or not, I make my interest and I leave. They make money typically when you succeed. That's the structure they are. So there's the ethical element, there's the religious element in that no interest in it, and there's a large population keen on that religious element as well. So we've been seeing the growth in non-interest finance. As you said correctly, Sukuk issuances have have been significant over the years, as in since 2017 up until date. The federal government has raised about 1 trillion naira in Sukuk. And this has gone to roads, bridges, schools, and what have you. It's one area where we need to improve the products that come out and also take away the religious connotation that a lot of people tie towards it. It's a positive investment class, as you rightly said. The UK has a strong Islamic finance structure and institute. They are leaders in Islamic finance. And we also now need to get to a place where we're beginning to structure right and make ethical investments, make non-interest finance more attractive to people. So as it's entering, this is the second phase, which I call a phase where it's moving beyond just government sukuk into the corporate and some national sukuk. It's important that we encourage more corporates to start exploring it as a channel for raising sustainable capital that considers their success as well, and is not just tied to interest alone, but it's tied to their growth, which by virtue links to economic growth as a whole. Thanks.
Completely agree. Yeah. All right, we've got 2 to go, guys. Thanks for hanging in here with us. We've spent about an hour. So it's been fun. I've been learning and just listening to you just explain this stuff down. It's very, very educative to me as well. We've got lots of folks here on the space. Once we're done with this 2, we'll open up the floor, maybe 20, 30 minutes, just get questions, and then we'll call it a day, right? So let's do green bonds. Green bonds, of course, are bonds, but have this, environmental tint to it. Quick question. The goals of the green bonds and Nigeria's fossil fuels driven economy, are they complementary? Can this growth be mutual or is it exclusive? Can the NNPC, for instance, survive when we're issuing green bonds that are basically saying we want to have less of NNPC and less of fossil fuels? What's your take again on this?
I think sustainable finance generally and green bonds specifically is important to the world. So the world is changing. And we have to be mindful of our greenhouse gas emissions and ensuring we have a world to live in and our kids have a world to live in as the years go by. But we're in a very delicate position where, as a country, fossil fuels, oil and gas is the mainstay of our economy on the one hand. And on the other hand, the responsibility or the fault, if we are assigning fault for ozone layer depletion, doesn't really lie with Africa as a whole, because we haven't gone through our own industrialization phase. So we're at that conundrum where they're telling you, get off the oil and gas bandwagon and come into the green elements when you weren't fully responsible. But that said, I think because of the amount of interest in the green finance and sustainable finance globally, there are massive pockets of funds across the world that exist for transitioning into a cleaner environment. So I say these issues, the sustainable finance elements and oil and gas, we can basically walk the tightrope where we're building more sustainable finance projects to attract the massive funds that exist globally, but also in our fossil fuel elements, moving closer to the gas, which is a transition source of fuel as against oil. And mind you, Nigeria is a gas country more than it's an oil country. Most people don't know that.
Sure.
We're more of a gas country. So and a lot of initiatives from this current government is going into how we can develop that gas asset a little bit more. So it's a stand. The stance is we must walk the tightrope. It is important. Make no mistake about it. That Nigeria starts to attract more green finance into the country. We're not doing as well as we should today, even though we've had a few green issuances. But in recent years, our stock of sustainable finance has dropped because there were a few liquidations within the year. So we need to start structuring the right projects to get this going. While we focus on our oil and gas transition, moving more into a gas economy as against oil.
Yeah, well, very well said, Lami. Very, very well said. Let's do the last one, professional services. Again, I was struck by the contribution to GDP, 2.49 trillion to Nigeria's GDP from lawyers, accountants, that professional class and all that. So again, very, very impressive. I did read earlier in the report this thing about the catching the youths, right? What's the name you guys had for it? The Youths of Enterprise. Yeah. Yes. So could you speak just more on that and any success stories and how does that work? Is it driven by you? Is it universities, secondaries? Just speak more on that, just so we could have that in case someone is listening and wants to contact you on how they can sort of link their school up with you guys. Speak more on that, please.
So the Youth of Enterprise initiative is one that we are very excited about at Enterprise Nigeria. It's an internship program that focuses on young people, gives them employability training. Because yes, we believe we have an unemployment problem in Nigeria, but I think as critical as the unemployment problem is also the employability problem. Kalu, you run a business. Sometimes you find out how difficult it is to fill a position because you just can't get the right people.
That is true, yeah.
And we figured out that while a lot of young people have university education, which focuses on the hard elements, so strong technical training, the YDX type thingies. There is that element of providing the soft training that improves the employability. So that's what our program is about. It gives you in 3 weeks orientation. You are trained on the soft issues. Then you are also placed with top organizations that are members. So big banks, big insurance players, fintechs and all are members. And you are placed there for 6 months to have that very critical, much needed work experience. Because another issue people face, where young people face when they get into the labor market, is they will say, oh, you don't have work experience. Go and get work experience.
How'd you get it?
How are we supposed to get the work experience when you don't get the job?
Exactly.
So, up to date, we've run this program since 2002. Up to date, we've onboarded 2,000 young Nigerians and successfully placed them. And over 85% of them are even retained. And for the ones that are not retained in the organizations we've placed them, you can imagine we've enhanced their abilities to get a job.
That is true.
Employability. So we do this in partnership with our members, our employer members. It's a paid internship, so they get paid. They get paid while they are interning and getting this very strong training to back it. We figure out that, look, our country is 230 million growing. Over 75% of our population is young. We need to start taking serious action to turn our population in strength to a strength rather than it being a weakness to us. And I strongly believe, as we all do at Enterprise Nigeria, that it's our population is a strength, and we think working with other key stakeholders, we can empower these folks. it's not a come-all type of initiative. It's the best because we have, you would write, our selection process is very rigorous. So it's the best across Nigeria. We have interns in every state in Nigeria today.
Wow.
We have at least 1 or 2 or 3 interns across, and we're currently on the 5th, going to the 6th cohort of the Youth of Enterprise. And yeah, that's what it's all about.
Yeah.
We believe we would grow the talent for today and tomorrow. And that would power the transformation we want in our country.
Someone just sent me a DM, says, Carl, this is the best part of the space. So, yeah.
I like that.
Yeah.
Just,
So,
whoever that person is, I mean, go to our website. You will find all of the details you need to know around Enterprise Nigeria and the Youth of Enterprise. And yeah, we welcome you to come on board. Let's green start your career, as we normally say.
I mean, just this is just really, really fantastic. I'm just looking at the reports as you're speaking, really, and just want to say I've shared that report out, and I think it's just free research you guys have done, really, for folks that are in that space or want to write a report or need research reports from Nigeria. Lots of graphics. I'm looking at the diaspora. The data you guys have put up there, comparing Nigeria with India, comparing Nigeria with the other African countries. Also looking at the data you guys have put up there, where the money is coming to Nigeria for the banks, comparing where the funds that are flowing to Nigeria are coming to. And you can just instantly see the issues with Nigeria, where we have all this money coming to banks, then in trading. When you look at fishing, hotels, servicing, training, webinar, consult, there's no money coming in there. The money just coming into bank, and it just tells you what you see. The data just sort of backs it up on how Nigeria is. And again, just the pictures again around the report. I like that you guys did the cultural theme using the Nigerian the pictures, the culture and all that. It's a very, very rich report. Kudos to everyone that contributed, not just to the data, but to the picturing and all that. You guys are hidden. You guys should talk more. I think you do a very, very good job in this organization. So kudos to you guys and to you for just being wonderful to explain all this to us in a manner that is not engaging as well as informative. Thank you.
Thank you very much, Kalu, and very excited to be able to share some of these insights with you and your audience. And I mean, all I can just say is there's a lot more contained in the report, and encourage everyone to download it. As Carlos said, it's free and quite insightful. Would open your eyes to a few things, a few opportunities here and there as well for you.
Thanks. But we do have we do have a few guys here that I want to ask a few questions. I've got Oxley and I've got Abuja. So let's take Oxley. Oxley, hey, thanks for hanging in there, waiting for us to just get through the report. What's your question, Oxley?
Carlo, thank you. I don't really have a question. I've been listening. What I'm hearing from here is quite educative, and I think I've gained one or two from this section today. Thank you.
Completely agree. Let's get Abuja Ponta. How are you, sir? Thanks for hanging in as well.
Good evening, Dr. Carlo.
How are you doing, sir?
Okay, I'm okay, sir. And good evening, Enterprise.
Yeah, his name is Lami Adekola. Sorry, I've been calling him Enterprise. His name is Lami. Yeah.
Not a problem.
Okay, I'm very sorry, sir.
No worries.
Doctor, good evening, sir. So I've been enjoying the session. It's been very educative and enlightening for somebody like me that did communication. So you see that I'm new in this area. So I have a few questions I want to ask. I don't need the floor is open. Can I?
Please go ahead.
Okay. So I want to know, Doctor. Doctor mentioned initially when he was talking about there was something he was trying to explain about the Nigerian stock market, and he said something like there are some programs or there are some, I think, amendment or whatever that want to go down in that sector or in the area that should be able to enable investors to make money both when the market is down and when the market is up.
Okay.
So,
yeah, I understand.
Okay.
Yeah.
Okay. So when you listen to some of these Western investors, they tell you that they short a market or they short a stock of a particular company and they did this and they did that. Then when you now come back home here, maybe looking at I have Bamboo as an app for investing. Then I have I think Optimus too from Afrasian Bank. So you don't see some of these things there. So I want to know how soon do you expect this kind of thing to happen? So that is the first question. I don't know if I can take this second one. I shall like to answer this one first.
What's the second one?
Okay, the second one is for this new guys into the field, like the apps that I just mentioned. How secure are they? What if something happens tomorrow? Are we will I get my fund? Who am I going to get it from?
Yeah.
So I just want to clarify in that area. So thank you.
That's a good question. Yeah.
Lami,
he's asking about.
I think it's echoing.
Yes, I've just muted him.
Yes. Okay, thanks. Happy to jump on it. I think the first one, which is talking around the depth of our capital markets. So as I said earlier, that's a suggestion that is being worked on, that we're working on and having a conversation with our folks at NGX, at FMDQ, who are all members of Enterprise NGR, to see how the markets can be deepened. With respect to a timeline, I don't think a timeline can be given by Enterprise NGR. I'm sure you would, if you stay tuned, you would hear from the markets when some of these products are introduced. But definitely I can tell you is within consideration on how our markets can not just, will no longer be one-sided. So we trade only on the upside. We must explore the downside elements as well. And things like that. So yes, that's for that bit. The second one is around safety of some of these investment apps. What I would say to you is you need to be very, very, very detailed with your research around these companies. So find out what kind of regulatory licenses they carry. If they are licensed by SEC in Nigeria, for some of the international ones as well. Find out if they are licensed by the SEC in the US and the Financial Regulatory Council in the UK, Financial Regulatory Authority as well in the UK. Because it's a thin line. I mean, all of you heard about MMM. It came, made a lot of noise, and got away with a lot of people's money. But if you just did the first level research, you would have found out that these were funny type of people. So do your research. Then if anything sounds too good to be true, most often than not, it's actually not true. So be careful.
Yeah, well said, Lami. The second one again, if it's not SEC Nigeria registered, I wouldn't trade through them. It doesn't mean once they are SEC registered that they are 100%, but you don't want to deal with anything that is not SEC registered. Just that'll be your first screening. And in the way these guys operate is that when you are buying those stocks in Nigeria through the app, you are actually placing your order through a US registered app. So the Nigerian firms that you see are like the front office where they can receive orders in Naira from Nigerians. But the actual orders are being placed in the US. I think it's through a company called DriveWealth. DriveWealth is very big and they do this third-party emerging market trades, right? So when you buy through DriveWealth, your stocks are then bought from a US registered broker. So the second question is, in whose name are your stocks being bought in? Because you are not resident in the US and you don't pay taxes in the US, there's a way they custody your purchases. It will be in DriveWealth or in the name of the firm in Nigeria you're buying, but not in your name. You can request to get your actual certificates from America. if you want to. But then what's the point? If you get that certificate, that means before you sell, you must send that certificate back to America. So nobody in America has certificates. You buy, it sits with the broker. You also sell. It's dematerialized. That's the word I'm trying to use. So once you go through a SEC guy, and the guy buys for you via Drive Wealth, and you have that contract note, more or less the equity itself, the what you bought is kind of safe. If you make money, it's a different topic entirely. But what you bought is sitting in a custody in maybe State Street or so in America. But if you make profit, it's a different matter entirely. It's a big assist. When I was growing up, we didn't have apps even to buy Nigerian stocks. Talk about American stocks. Now you can sit in Quora and buy Tesla in Naira. You are exposed to a dollar company, right? So it's a big assist. And like I think it was Michael that said he buys US stocks. The younger folks today just have this huge advantage that we never had. So I would say if you're a younger person, these stocks you don't have to. You can buy Tesla for $25. You don't have to buy the 100 or 600. You buy them in fractions. And you can invest. Same thing in Nigeria. We have ETFs as well, but we also have mutual funds. I think Nigerians do more of the mutual funds than the ETFs So you can don't wait till you have money. If you're a younger person, which means you have a long period to compound, and you can also absorb risk. When people give you money, just mentally, once you have money in your hand that you earn, mentally deduct 20%. Mentally, just deduct it. Go and invest it. Don't put it in bank. Bank, you can go and withdraw it. Just take it, buy stocks, forget about it. What stock should you buy? I don't know. Buy the index. Don't look for I want to buy this stock, I want to buy that stock. Buy the index. You are buying Nigeria. If you don't buy Nigeria, buy the US. It's good advice for the younger people. You have a longer period to invest. You can absorb risk. Don't buy and trade and tomorrow you are selling this because you heard Bloomberg. No. Buy the index, just leave it alone. Let it sort of compound on your behalf. 10 years, look at it. Look at it 10 years and all that. But it's a big advantage. Take advantage of it. Lami, I can't thank you enough for coming in here today and just speaking with us. An hour, 30 minutes already from your Saturday. And I'm not sure what team you support, but it's been, we've pulled you from that to talk to us, and we're so grateful for that. Thank you so much. I hope to see you guys again. And any closing thoughts?
Thank you very much, Carlo. And I think it's 1 hour 30 minutes, very well spent on my own part. And your questions were very detailed, very insightful, and also some of the comments from your audience was also phenomenal. I think what I would say is, in conclusion, is our sector, the financial and professional services sector, is critical to our economy. It's critical to our aspirations to create a country all of us will be proud of. And we at Enterprise NGR recognize the fact that nation building is not just the responsibility of the public sector, government alone. It's the responsibility of the private sector as well. Carlo, I'm sure you've watched this movie, The Men Who Built America.
Yep.
Private sector individuals built America with the support of government. In some instances, the private sector guys even build our government. So we see that, and we think we can transform our country by getting our sector working efficiently. So thank you, everyone. I would recommend you download that report. I also recommend you follow our social media handles, because we share a lot around what we're doing, our events and stuff. Most of our social media handles are Enterprise NGR. So once you just Google it on the different socials, you should see it. But thank you very much. Thank you, Carlo, as well. I cannot thank you enough for having us on board as well. And we're always excited to speak to the general public. Thanks.
Thank you so much, guys. All right, folks, it's a wrap for Saturday. We're going to be back here Sunday, same time, 7 p.m. West African time. Tomorrow, we're talking the new customs fee on board, 4%. We want to see how it's affecting the import of cars and even inflation in general. So it's a good way to just hear that sector and look at how policies are affecting your pocket. So tomorrow, same time, we'll be hearing it on that topic. On that note, guys, thank you so much for being here with us on a Saturday. We'll see you guys here tomorrow. Keep it simple. Take care of yourselves, man. Have a good day and bye. Thanks, guys.
Thank you. Bye, everyone. Bye.
Bye.